Anyone who's remotely interested in finance or the financial markets or investing or trading has heard of Warren Buffett. Even if you're not interested in things like investing and trading, you still must have heard of the famous Oracle of Omaha and his legendary firm, which is worth several $billions. And one of his mantras is, if you cannot control your emotions, you cannot control your money. Now, for a newbie, this may come as a surprise to you because, what does this even mean? We all think that markets are dominated by charts, by candlestick charts and indicators and technical analyses and fundamental analyses and what the Bank of England says and so forth, which is true. But what moves these financial markets and what lets these events, say, an announcement by the Bank of England or an announcement by JP Morgan, what allows them to acquire a life of their own is how we react to those markets. And the way we react to those markets is something that is increasingly being felt and felt palpably. It has been felt palpably over the last 1 year when sentiments and human emotions have really been driving the market, and the GameStop saga is just one example of extreme emotions, causing the markets to go haywire. So for all of their quantitativeness, markets and market movements are fundamentally affected by emotions and by sentiments. And which is why textual analyses and the field of natural language processing, NLP stands for natural language processing, it is increasingly becoming more and more important in the world of finance. And if you want an example of where sentiments really take on a life of their own, is in the cryptocurrency space. So on 18th May there was this news: extreme fear in Bitcoin market amid price plunge, Bitcoin under pressure despite improving sentiment, fear, sentiment, uncertainty and Bitcoin price dynamics. And there's a full paper which actually identifies that fear, sentiments and market volatility has been exacerbated by fear sentiment, which has resulted as a result of coronavirus, and find negative Bitcoin returns and high trading volume can be explained by fear sentiment. So fear is so powerful that it's actually driving a multi-billion-dollar cryptocurrency and actually causing the prices to fall. And this happened in 2020. A more common example that we must have come across is Bitcoin price sentiment, Elon Musk tweets. So how Bitcoin price moves with Elon Musk's tweets. Elon Musk's tweets it swings the market sentiment. So a tweet posted by Elon Musk, it boosted the value of Bitcoin price, which is getting inching closer to 40,000. This was on the 14th of June, and that's when he said that actually he's going to resume accepting Bitcoin. So one day when Elon Musk says that no more Bitcoins, the prices fell, he says yes to Bitcoins, the prices of cryptocurrencies rise. And what is driving this is our reaction, our emotions to these sentiments. And one way of gauging sentiments around Bitcoins, etc., is the Twitter. And does Twitter affect stock market decision? Yes, there's another paper. And yes, so financial sentiment analysis of Twitter accounts, how they drive the financial markets, that was examined. And it turned out that yes, indeed, that markets, they react to the information being shared on Twitter. So what is it about Twitter? What is it about Elon Musk's tweets that actually drive Bitcoin? Now what happens is, Elon Musk's tweets in themselves, they have no power. What gives them power is our sentiment, and it is this field of text analysis and natural language processing which is a very powerful way of understanding market sentiments and then seeing how they may influence market behavior. So now I've done work with some Twitter analyses, and I examined a subset of tweets from the first 6 months in this year, and an examination showed me that things like chart, Bitcoin, Elon Musk, Tesla, Doge, SpaceX, crypto, fear, so these are the dominant words that have been turning up. And what you see over here is one of the most commonly applied examples of text analysis and sentiment, text mining and sentiment analysis. So a subset of tweets, it showed me that Bitcoin was the most common and most widely discussed topic in the cryptocurrency sphere, which is not a surprise, but again, cryptocurrencies like ETH are being discussed, and same goes for Ripple, which is XRP, and Dogecoin, which again gained prominence because of Elon Musk. And Elon Musk didn't figure so much in those tweets, but again, these are the cryptocurrencies that have been dominating the news waves, and it is our sentiments, and it is only by examining tweets which are a mirror of our sentiments or of the market sentiments that we can get an idea of whether how the prices may move. Because what happens is, now this is another analysis I did. With textual data you can compute the polarity, and with polarity all the negative values represent negative sentiment and positive values represent a positive sentiment. So on the 4th of February, it seems that the cryptocurrency market had a positive sentiment, and it fell back to having a negative sentiment just the next day. And this is the extreme volatility of this particular market, and you can actually see. So there have been times when the sentiment has been positive only to dip very sharply to the negative over the past 6 months, and that's being reflected in the prices. And finally, when I examined all of my Bitcoin tweets, I realized over the past 6 months most of the tweets have been neutral as compared to negative, and positive tweets, they outweighed the negative tweets. And to be very fair, for all its fluctuations, most cryptocurrencies, Bitcoin has been mostly holding firm over 30,000, and except for a few exceptions, Ethereum has been holding strong around $2,000. So yes, these are some of the insights that we can glean from text analysis and natural language processing. And up to what extent we can make financial decisions with it, now that's a different story altogether. But yes, examining sentiments that you get from newspaper headlines or tweets is a very powerful way of gauging the markets.